welcome to Ensure. Through this series over the next couple of weeks, we'll be bringing to you all the information that you need to make the most prudent and sound decisions about buying life insurance. For those of you who are already sold on the idea of investing in life insurance or some form of insurance, this series is going to update you on the latest developments, schemes, and benefits on offer. And for those of you who are asking that fundamental question, why should I care about a life insurance? This series will hopefully dispel all your myths and simplify the jargon and answer your questions on the show. So do please feel free to tweet at NDTV and use the hashtag Ensure, and we'll try and incorporate your questions on the show. But I'm not the only one who's going to be talking today. We have expert voices joining in on the show today. Welcoming in at this point our guests. Joining in from Mumbai is Harshvardhan Roongta. He's with Roongta Securities, and joining in from our Delhi studios at this point in time is Amit Kukreja. He's founder of Wealthbeing Advisors. Gentlemen, thank you very much for your time, and thanks for coming into our studios this afternoon. I really want to start ground up, and my reason for doing that is very simple, because with increasing digitization, we've seen that, more smartphones, the internet, etc., old ways of selling insurance may over time become unsustainable. And I was reading this one report recently. It's a 2014 report by BCG and Google India. They're saying that 3 out of 4 insurance policies sold in India by 2020, they would be influenced by digital channels, either at the pre-purchase or the purchase or renewal stages. So I don't see insurance companies really investing in, creating enough digital assets to engage and inform the mature online audience, and neither are they really giving out information on how to protect the average first-time buyer from being missold insurance products. So I want to start by defining, Amit, what is really life insurance?
See, insurance of any form is a protection against eventuality. It actually helps you deal with the risk of loss, right? This could be a loss of life, loss of health, loss of an asset, or loss of your working capability. So particularly talking about life insurance, it's a protection against loss of life. So any financial dependence on the individual, they suffer if the individual passes away.
True.
So how are we protecting that loss of life and the impact on the family? That's life insurance.
Right. Okay. So basically, it's a contract with an insurance company where you're paying the company a certain amount of money of your savings, so that in the eventuality of a loss, your family is protected. But I'm going to take at this point in time, I just wanted to get a quick sense on how is it, Harshvardhan, that you look at life insurance both as an investment option and as something that is fundamental, that something everyone should be looking at.
Well, Bianca, it's a very interesting proposition. If you talk about life insurance, if you talk about insurance per se, it is a mechanism wherein there is certain financial loss to individuals, and those financial losses are supposed to be indemnified. The individual needs to be indemnified and compensated for that financial loss. Now, when you talk about life insurance as a concept, let's understand one common situation when there is an earning member in the family, and he has a set of dependents on his income. Now, if for an unforeseen circumstance, if he was to pass away in an untimely manner, there is going to be an emotional loss to the family, and there is going to be a financial loss. Now, how does it make sure that emotional loss nobody can compensate, but how does it make sure that a financial loss is family is taken care of? Now, this is a mechanism wherein you buy a life insurance policy. In case of an untimely demise, the family gets an access to a large corpus which can be used for their day-to-day living. Now, this is the pure form of insurance. Now, what we've also seen, and which has been popular in India all this while, has been a savings-based insurance policy. What happens, this also encourages a concept of even saving for the future. Now, one eventuality we spoke about was an untimely demise. There is another eventuality which happens in a person's life, is living too long. In case you've outlived the earning and productive years of your life, there is going to be some financial requirements even for your own self. So this is where a savings-based product has been placed, wherein an individual can possibly even look at putting in some money, making sure that it forms a disciplined form of investment. He compulsorily, as a form of pays through the premium at retirement or at any date in future. He gets that kind of money in his own hand, which he can be used for his own retirement purposes or any other goal for that matter. Insurance policies are comprising of 2 parts. One is a pure risk cover, which I spoke about, and could be in the form of term insurance, or the other could be a savings based, which are your traditional endowments or unit linked policies. So this is a basket which can be used based on individual requirements.
Of course, and we'll come to the different kinds of types of insurance that we have later on in the shows. But it can't be that simple, right? Because we've got a very large young insurable population in India, and in most of the surveys that we've done, we've seen that one of the reasons that people are staying away from life insurance is they're saying that, why do I even need to think about insurance? I'm too young for this, maybe. So is there any merit in thinking that I'm too young for an insurance plan?
Well, in fact, if we analyze, we've interacted with a couple of individuals, and we've tried to understand what basically prohibits them, or why are they averse to even buying and thinking about insurance. The primary reason is that they've always been pushed into buying something by either their relatives or by somebody who's been pestering them to buy it. So there is kind of a phobia in the minds of individuals that insurance is something that they should not buy only because they've been sold or missold till now. The idea about financial planning, the idea of planning what your money is going to do and what you want out of your financial life, the first step of that is that you need to have protection. You need to have financial some kind of a protection wherein whatever status that you've reached till today, or if there are financial dependents on you, you need to buy that you need to buy that kind of an insurance policy which protects that income. Take in case of if you're buying a vehicle, if you're buying a car, besides the fact that it is mandatory to insure it, there is going to be a financial loss if the car gets lost or stolen, if it meets with an accident. So these are the kind of, there is a financial consequences to that. That is why you would go and buy insurance. Now coming to the younger population, well, yes, there is an aversion in their minds that I'm too young to buy an insurance policy. I need to buy it only after I get married, only if I have dependents. Well, some point in life you're going to have dependents. So even if you start investing into it or buying a cover in advance before you have dependents, I don't think it's a bad thing to do. It's something that you're just preparing for yourself for the future.
Amit, do you think that there is perhaps a growing recognition or awareness of the fact that one needs to look at life insurance plans irrespective of how old you are or how you're placed in life?
Oh, things have changed phenomenally. I mean, if I look at how people inquire about insurance in the last 5 years, people have got the awareness of not mixing insurance with investments.
Yeah.
Because I do investments planning as well, they come prepared saying that I need pure term plan and I need pure investments planning module in my financial life, right? So they do come to me. They often talk about how do we decouple it, how do we identify the right amount for which we need to have an insurance in place. The whole paradigm has shifted from buying an insurance, which is something that is insuring them about an income X years later, to buying a pure insurance plan, like buying an insurance plan for a car that Harsh was talking about.
Yeah.
So I think people have realized the importance of life insurance and health insurance, and they're very actively working on it, and they're also decoupling their investments from insurance. So no more...
Which is a new trend.
Which is a new trend,
And a
which
good
is a
one.
good trend, and I would ideally want everybody to have that kind of awareness to ensure not to mix up the two things.
Sure.
Because they serve two different purposes, and we have to identify. One is protection, the other one is returns beating inflation. If you have the knowledge of segregating the two and
That's
having
the
a
best
plan in place, it's wonderful. You are set for a financial success.
Right. So I guess, the sooner you start, the lesser you have to pay. And of course, the more you make, it might actually just be a bit too late. But I'm going to take a short commercial break right now. Don't go away. We'll continue chatting about why you need insurance. Stay tuned. Welcome back to Ensure, your weekly dose and guide on how to purchase the right insurance product for yourself. Joining in our studios and continuing that chat that we were having before the break, Harshvardhan and Amit. Harshvardhan, I'm going to come to you first. How do you decide on how much cover is just right for you?
Well, Bianca, this is a question which most people have never been able to answer appropriately over a period of even 60 years now that insurance has been very popular in India. Now, let's look at life insurance, for instance. If there is an individual and he has certain he has a few dependents on his income, let's understand of the financial consequences. Assume a family has a monthly expenditure of say 25,000 rupees per month, which is required irrespective of the fact whether an individual is, the bread earner of the family is available or not available. The challenge in front of the head of the family would be, how do I make sure that this 25,000 rupees per month comes to my family even if I am not around? Now, there is some financial calculation he needs to put into this. There are different methodologies in which you can calculate how much insurance you require. One of the most popular and simple to understand would be, if I need 25,000 rupees per month to come to my family, even if I am not there, if I have a 50 lakhs deposit in the bank, and that gives me a 6% net of tax returns, that is 3 lakhs per annum, which translates into 25,000 rupees a month. So if I had 50 lakh rupees today, I would put it in a fixed deposit and I'm sorted for life. The issue is, I have only 10 lakhs today. There is a gap of 40 lakhs which I need to fill in. And untimely demise could happen as soon as even today or tomorrow. How do I make sure that this 40 lakh gap has been filled in as early as tomorrow? I buy a life insurance policy for 40 lakhs in this particular case. So in case I am not around, a 10 lakh which I already have is available to my family. A 40 lakh comes in the form of a life insurance proceeds. This 50 lakhs together goes into a bank as a fixed deposit, net of tax, current rates are 6%. I am sorted with 25,000 rupees a month. So this is one of the methodology which a person can take and evaluate how much insurance is required. Well, otherwise there are many other methodologies and each individual is to his own in that case.
And of course, there is no one size fits all, obviously. But I'm guessing that, from what I've just heard from Harshvardhan, that, when purchasing life insurance, the question I should be asking myself and what my financial planner should be asking me is not how much I need, but how much support or capital my family would need in my absence. But top line, without giving any specifics, what would be that one mantra or that one right methodology to advise?
Unfortunately, there is no objective answer to this. There's a lot of subjectivity in it, Just extending what he said, and I'll try to answer your question. There are 2 or 3 ways. One is identifying the economic value of an individual. If an individual is gone, what is the loss of the economic value of the house, right? If he's earning X lakhs rupees a year and that salary is increasing at Y% every year, there is a futuristic income that can be built in the house. So when we lose the guy, we are losing that income. Second, the second way to look at it is expense replacement method. So if you're losing the guy, we are losing the ability to fund our expenses on a monthly basis, which is what Harsh also talked about. So we identify what is the present value of all the expenses put together, and we identify the insurance amount. Third is we look at the assets that he's leaving behind. Can those assets be liquidated and regular income be established? Fourth is forget all the first 3. Let's just do 10 times my salary. Right? So when we do insurance planning, we should do a little subjectivity and an in-depth exercise. In-depth exercises. What is it that we want to have for a family in place if I'm not around? And have a spouse involved in the conversation and then arrive at a particular figure. If you can't do that, then go with the simple rule of 10 times your annual salary. I think that should be sufficient to have the cushion for the family if the individual is not around, and the rest can be taken forward from that point onwards, including investments planning and how do we fund for financial goals of the family and other expenses which are impending in future.
So I guess that it can't be it's very difficult to give a methodology or an equation or a formula by which one can decide how much is right.
True.
Amit, Harshvardhan, thank you very much for your time and your advice. With those basic questions out of the way, we'll be back next week to discuss what the different kinds of life insurance that are there in the market and how you can choose which one is right for you. Don't forget to tweet with the hashtag Ensure and tag @NDTV to it. You can also watch this episode online on ndtv.com.